Welcome, financial enthusiasts, to a thrilling episode of our new series, Capitalise, by PhillipCapital. Join us as we travel the world and unpack some of the wildest stories in finance. I'm your host, Ayushi, and today we're bringing to you the GameStop Saga. Greed, power, money, a one-of-a-kind David versus Goliath style clash between Wall Street and the regular American person. This story has everything. To tell it, we begin with GameStop, an American game rental store that was identified as a company worth shorting by multiple Wall Street giants. The gaming system today is built to connect the internet, unlike those of the past. Upon noticing this, Steam, Microsoft, and other new age gaming distributors built entire businesses to distribute games online. Physical gaming rental businesses like GameStop weren't as profitable as they once were. Coupled with the quarantine, stay-at-home orders, and curfews of the COVID-19 pandemic, Wall Street could tell GameStop was in a pickle. To profit off this, some Wall Street companies short-sold GameStop via the derivative market. The financial institutes of Wall Street often use this strategy to pull off failing companies, an act that might irk the common man of America due to the loss of jobs that are accompanied by companies shutting down. And things would have gone according to plan too for Melvin Capital, Citadel Capital & Co., if not for four key players: Michael Burry, Keith Gill, Ryan Cohen, and Robinhood. Let's start with Michael Burry. Burry is an investor and hedge fund manager. While still in medical school, Burry invested in stocks and discussed his picks on the Silicon Investor website. He developed a good reputation due to his successful stock picks and decided to start his own hedge fund, Scion Capital, in 2000. Scion Capital outperformed the S&P 500 every year from 2001 to 2004 and grew to $600 million in assets. He was one of the first investors to predict the subprime mortgage crisis and even shorted US housing market in 2005. Although it was an unpopular decision amongst his investors at the time, it eventually paid off to the tune of $100 million for Burry and $725 million for his remaining investors. This gained him so much popularity that the movie The Big Short was made based on his story and even played by Christian Bale. The next key personality in this story is Keith Patrick Gill. Keith Gill is an American licensed securities professional and a financial influencer, known for his posts on the subreddit Wall Street Bets. His analysis of the GameStop stock, NYSE GME, and the details of his resulting investment gains posted on Reddit under the username DFV and on YouTube and Twitter as the Roaring Kitty was cited as a driving factor in GameStop's short squeeze of January 2021 and as a spark for the subsequent trading frenzy in retail stocks. Next in line, we have Ryan Cohen. Ryan is an activist investor and the founder and ex-CEO of Chewy, a popular pet product brand that grew primarily via digital distribution and superior customer service. In 2013, Cohen secured the company's first outside investment from Wallet Capital for $15 million. By 2016, he had raised capital from investors including BlackRock and T. Rowe Price New Horizons Fund. That year, the company had $900 million in sales and had become the #1 online pet retailer. By 2017, he raised $350 million and was prepared for an IPO. In April 2017, PetSmart purchased Chewy for $3.35 billion in the largest e-commerce acquisition of all time. That year, Fortune named Cohen one of its 40 under 40 and Vox named him to its record 100 list. Cohen remained CEO following the acquisition and operated the business largely as an independent unit of PetSmart. He grew the business to $3.5 billion in revenue in 2018, including 66% of sales coming from customers signed up for automatic recurring shipments prior to stepping down as CEO to pursue personal goals and spend time with his family. Lastly, we have Robinhood, a relatively new entrant into the highly competitive retail investing market. Robinhood has gained popularity by offering commission-free trades of stocks and exchange-traded funds since March 2015. Targeting the digital nomads, millennials, and Gen Z, Robinhood stood out from the crowd by allowing retail investors to invest into the market via an easy, simple-to-use app along with playful devices for making trading attractive, such as digital displays of confetti upon customer actions, very much like our own Google Pay. On January 28, 2021, the short squeeze caused GameStop's retailer stock price to reach a pre-market value of over $500 per share, nearly 30 times the $17.25 valuation at the beginning of the month. And it all began in 2019 when Michael Burry bought a stake in GameStop because he was convinced that the stock was undervalued. He penned 3 letters to the video game retailers' bosses, urging them to buy back shares and clean up their act. In September 2019, Gill, under the username DeepFuckingValue, posted on his subreddit Wall Street Bets a screenshot of his trade consisting of roughly $53,000 long position in GameStop. Through his Reddit posts and YouTube videos, he argued through both fundamental and technical analysis that the stock was undervalued. Roaring Kitty's posts were described as forthright, spreadsheet-laden content, while he disclaimed his content by saying, "I don't provide personal investment advice or stock recommendations." It was his argument that attracted the flood of retail investment into GameStop. In 2020, Ryan Cohen revealed that he had purchased 9% of GameStop, resulting in a GameStop rally. And with apps like Robinhood causing a revolution, the financial market, with easy-to-use, fun, zero-commission app, hundreds of thousands of investors started downloading it to get in on the GameStop action after the valuation spike of January 2021. Entrepreneurial icons like Elon Musk and Mark Cuban joined in on the saga that captured all of America's attention, cheering for the retailers who invested in the stock. And amongst the fanfare, Ryan Cohen was appointed as the CEO of GameStop with the mission of modernizing GameStop's brick-and-mortar business, which led to a further improvement in stock price. But this story isn't just rainbows and sunshine. From January 13th, 2021, GameStop shares saw a sudden and drastic increase in price and return volatility. The run-up was reported to have been led by a large increase in trading by retail investors using the Robinhood financial platform, organized via social media, in particular Wall Street Bets chat forum on Reddit. Citing collateral issues, in reaction to this, Robinhood imposed trading restrictions on January 28th, barring new long positions while continuing to permit unwinding of existing positions. These unprecedented events attracted not only the attention of investors but also legal and political scrutiny. Regulatory bodies stepped in to investigate potential market manipulation, and politicians from various spectrums criticized the actions of Robinhood, highlighting the need for a market reform. As we fast forward on March 24, 2021, GameStop's stock price plummeted by 34% after earnings were released. But on March 25th, the stock made a dramatic recovery, rising by 53%. Till today, the GameStop stock is rather volatile.
Rebellion continuing to play out today. GameStop surging again after hours.
It's amazing that the average person can now actually get a fair shake since against the hedge fund.
Wall Street speculation and these hedge fund guys, they've been manipulating the stock market in a very similar way.
But what makes this unique story special is that the GameStop saga didn't just capture financial headlines, it resonated with the public. Online communities, particularly on platforms like Reddit, celebrated the triumph of the little guy against the institutional giants. And amidst this craziness, at least one of the major institutions shut down. GameStop sparked conversations about market democratization and the power of collective action in the digital age, and was the forerunner for other meme-marketed stocks and cryptocurrencies. As we reflect on the exhilarating GameStop saga, it's crucial to acknowledge the darker realities of financial markets, especially the vulnerabilities and risks associated with speculative trading. If you're navigating these markets and want some help, don't forget to follow PhillipCapital on Instagram or just comment below with your questions. We'd love to help you out. And if these kinds of extreme finance stories are your thing, don't forget to subscribe to our channel so you'll never miss out on a video. Thank you for joining us today on this extended journey through the GameStop saga. Until next time, stay informed, stay passionate, and stay financially savvy. I'm your host Ayushi, signing off for PhillipCapital. See you in the next episode.